G'day everyone, welcome back to Pete's Investing. Today is February 9, 2023. This is the S&P 500 update. As you can see here on the daily, we did draw this key resistance area up here since our last update, and the price has been consolidating along that resistance line. And you'll notice down here on the daily, on the CCI 1500, the CCI is coming and approaching its moving average and potentially bouncing off that and potentially moving to the downside. Now I say potentially because we're not sure if it's going to continue up, because you notice the Stochastic is reached near the oversold territory and making a rise, but that may be short-lived. Looking at the 4-hour and the hourly, you'll notice the CCI is breaking to the upside, and likewise the hourly, the CCI is also, moving average is also in a more positive move. Although notice the hourly, it's reached the overbought territory and it's been bouncing off that for some time. So we may see a bounce down from there, and there is a sign that that is very likely. There is no sign yet of a continuation to the upside. So to be more positive and more bullish on the S&P, I'd like to see the moving average, the CCI break above its moving average, and the moving average itself turn to the upside, and also the price break through that and more positively to the upside. At the moment, I'd be very cautious about going long, more in line with probably taking some, as soon as we see this break to the downside on the hourly, especially on the 4-hourly, it's probably we'll see a lot more weakness in the S&P 500. So again, very cautiously go long if you're going to do that. And to understand how to properly trade using the average down approach, reference the playlist at the end of the video, and also the links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends. If the stock price goes against you, don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button, and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.